Welcome back. You're watching Investors Guide on ET Now, and we're talking about our top recommended funds that you should be investing in the new year. The idea is basically to help you pick the right funds within various categories. It's time now to talk about our debt funds. And topping the list of debt funds is SBI Dynamic Bond. IDFC SSI Medium Term Plan A comes in second, and Templeton India Income Builder comes in third. Now, the SBI Dynamic Bond has returned over 11% in the last year, which is not surprising considering that interest rates have been so high. But tell us how to pick one income fund over another. How can an investor watching the show right now tell the difference between one income fund and the other? How does this one top its category right now?
The way to evaluate income fund is fairly straightforward. One is that don't go by the return. These returns could be very misleading because these returns are entirely a function of, one, their past performance. The other is that they are a function of the rate outlook prevailing then, and the outlook for interest rate actually has changed quite dramatically. And why I have chosen these funds, because they have ample flexibility to change their track. They are not they don't have a frozen mandate that they will be a short-term fund, or they will be a medium-term fund and they will have a maturity. And the only flexibility which a fund manager gets within his mandate. So one is that these funds, the selection here has the flexibility. The other is that these funds have two things which a fund manager can emphasize. One is go down on the credit quality, which often proves to be if within the investable universe, a compromise on the credit quality, or going down the credit ladder, but doing it opportunistically or doing it selectively, using his judgment, can add some meaningful value, which some of these funds have done. The other is their ability to change the maturity of the portfolio, and the way things have changed. I think these funds will be able to capitalize on such opportunity, and SBI Dynamic Bond Fund has proven its worth with its performance in recent times.
You did talk about the fact that all of the performance of debt funds and income funds depends largely on the rate outlook, and we know that the RBI is possibly considering bringing down interest rates in the new year. How do you think a debt fund investor should now react to this news? Should they now be rebalancing their portfolio towards equity a little more?
Many investors in India, they are either a fixed income investor or equity investor, and within fixed income their approach changes. I think 2012 will be a year when FMP will not have their charm as it had in 2011. I think medium-term bond fund, long-term bond fund will be able to build a stronger case for themselves, and fund managers will be able to take bets on maturity and benefit from it. And this selection will particularly benefit, which has ample flexibility.
This selection will benefit. Let me give you a recap on the funds that we're talking about. These are our debt funds: the SBI Dynamic Bond, the IDFC SSI Medium Term Plan A, and Templeton India Income Builder. All right, moving into our last category of funds we're going to be talking about on Investors Guide. We're talking about international funds. And this is important because international funds really came into focus over the last year when our markets weren't performing so well and investors in India were starting to look overseas. Now, topping our list of top recommended funds on Investors Guide for the year is Motilal Oswal's Most Shares Nasdaq 100 ETF. Coming in second is the HSBC Brazil Fund, and of course the DSP BlackRock World Gold Regular, that's coming in third. Now, Dhirendra, I want to talk to you about the first fund. This is tricky. It's an ETF. There's not a lot of fund management involved. We also know it did well over the last year because the rupee devalued. Now, for someone looking to invest in international funds, obviously the rupee being devalued is not something we can predict at all. That could move against us at any point. So do you think that this fund is going to continue performing the way it has? It's slightly tricky to decide on an international fund, isn't it?
Generally, my thinking is that international funds have a role in an individual's portfolio, primarily to provide diversification, or a very useful diversification. Most of us are, have our assets here, have our assets domestically, have our house here, and have our jobs here. So having a part of your investment which is completely, not related, but in this globalized world, even that is not unrelated. These three funds are primarily, they are not, the selection is not to provide diversification. They are opportunistic selection. These funds are basically my expectation of their likelihood of delivering return, superior return in in short and medium term. And despite the rupee appreciation, what I find is that this fund has been outstanding. Here is the Nasdaq 100 is a choice primarily to give give an Indian investor an exposure to the US market. That's about it. There is no other clear vehicle available.
So that's a wrap on Investors Guide. Thanks for tuning in this week, and thanks for tuning in all through the year. Remember, you can always write to us. Email ID is at the bottom of your screen, and you can catch this episode on Facebook as well, facebook.com/Investors Guide. Tune in through the whole of next year to watch Investors Guide. The same team is going to be back to help you with your investments. Dhirendra Kumar, thank you so much for spending time with us. Happy New Year to you. We look forward to spending time with you in the new year. Thanks for watching.